Hello, hello. Okay, guys, I am going to show you how to analyze a property in under 10 minutes. I will try to keep my talking limited. So first thing that we're going to do is note that this is an amazing spreadsheet. There are all these tabs down at the bottom. I am going to be working off of the first tab here, and we are going to look at returns from year 1 to year 30. Now, this is what's called a pro forma. This is my pro forma. I created this with an engineer, and I'm just going to walk you through how to use it. And if you want to get a copy of this, and everybody should, because quite honestly, it is the best pro forma I've ever used. Clearly, this is all I use for 10 years. There is going to be a link after this video, and you can drop in your information, and I will email you a copy of this spreadsheet. So first things first. Now, if you don't know who I am and if you haven't heard of me before, my name is Melissa Nash. I have been an investor for over 10 years, and I have helped over 2,000 people buy properties just like this one that I am going to analyze. Now, part of what I do is I am very big about people and teams and who to trust, and I have vetted out some of the best teams in the best markets in the United States. So this is one of the markets that I like. This is in Canton, Ohio, Akron, Ohio, that area. I love this area because of all these reasons I have listed out here, but we can get really high rental demand, we can get cash flow, we can get some appreciation. And the team that I work with who gives me this property, by the way, I have vetted out partners. I don't own these properties. They renovate properties and they give them to me. Now, I love this market because of all the reasons why I just said, but also because of this team. They're absolutely phenomenal. They have warranties and rental guarantees and awesome property management. And for example, they give you free property management for the first year. Really solid team. So they're going to go in, they're going to buy a distressed property, they renovate the property, and then they give that property to me. And so now through my deal bank, you get access to these properties. So let's go through it very quickly. Again, I do this in a lot more details once I'm working with you and you're a part of my deal bank program, which gives you access to these off-market properties. But now I'm going to fly through this one really quickly. I do the work for you, okay? I'm going to change my pen tool to purple so it really stands out. I do the work for you on these spreadsheets so that you don't have to. Obviously, you're going to do your own due diligence, but this, again, the spreadsheet is awesome. The work has been done for you, and then I plug in the rest. So again, if we're working together and I'm sharing this property with you, then you are going to see in this first line right here, you're going to see the sales price. Now, I plug in the sales price for you. If you are making an offer on the MLS or anything like that, you're going to have to plug in your own sales price. But again, if you're working with my off-market inventory, I plug it in for you. I've already negotiated it for you. This is the price that they're willing to sell it to you for. So number one, that is the price. Then we're going to, all of this is calculated for you. So we're going to skip this and catch up below. Rents. We need to get the rents from the property manager directly, the local property manager. You can go look on Zillow or those sites and get it, but they're just not going to be as accurate because it doesn't have the full picture. I go straight to my local vetted out property managers who are in place on this property, and I plug it in for you. Now what you're going to do is we're going to plug in property taxes and insurance. Again, if you're working with me, I plug it in for you automatically. You can go find it. Now, property management fee for the first year is 0. So it is going to show 0 right here for the first year. Now we will add it back in for the second year analysis, but for now we're going to plug that in. Now, this is the column that I want to show you guys. We're going to keep on scrolling here. Let me zero this out. Let me go back to my trusty pen tool. This is the best column in the world. This is the one you should be focusing on my spreadsheet. Now, we are going to come back to that because I wanted to continue to show you where I have the expenses taken out, okay? So I'm going to erase this, and I'm going to scroll down the list here. We're going to look at the other expenses here, okay? So right here in this box, we have the mortgage information, okay? Now, this assumes you're putting 20% down. You can change that if you want to put more down. And this is the interest rate. right now when I'm recording this, this is the average interest rate that I'm seeing for investment properties. You can change that. The rest of this math will be calculated for you. So it's showing this is your monthly mortgage payment. The math has been done. Now down here, I do this for you. Again, if you're working with me and I'm handing you one of these properties inside the deal bank, I plug in the average historical appreciation, and then I plug in the average historical rental increase. If there was a management fee, I would plug that in here. With this property, it's free for the first year. And then I'm not going to add anything for vacancy and maintenance yet, because we're going to learn more about the property before we worry about that. Okay, so we're going to leave those blank for now. Now, as you can see, we're going to jump very, very quickly into the numbers, because the numbers are probably teasing you here because they're absolutely phenomenal. So right here, we are going to be looking at this thing right here. This column, this shows you your monthly cash flow. So this is assuming, okay, we've got property taxes taken out, we've got insurance taken out, free property management for the year, and then we've got this mortgage taken out, okay? So it automatically does this for you. So if you change any of these numbers in green, then it's going to automatically do it for you, which is why I love the spreadsheet so much. This property has a monthly cash flow of $426 after all those expenses are paid. You guys, that is a phenomenal return. And what is that return? We're going to look at cash on cash return, this one. 16.47%. Now, why is this number such a big deal and why do I love this number? I want you to look at this number first. For year one, so we've got year one column and we've got it all the way up to year 10. Okay, year 10, your cash on cash return is almost 30% return. Okay, so what is that number and why am I obsessed with it? So I'm going to take you back up to the top here and I'm going to quickly explain it as fast as I can. So when we have the calculation below that you're putting 20% down, shows that your down payment is $27,000. So 20% of 135 is 27. Again, the math was done for you. You don't need to do it. You just plug in below in that mortgage area what you want your down payment to be, and it will carry it forward for you. Now, we also have some estimated closing costs, okay? These are depreciable, meaning save your closing costs, give it to your tax person. It's probably a tax write-off for you. So estimated closing costs are going to be on here. Now, because I made that too big. So we are looking at about $31,000. Let me highlight that again. About $31,000. Okay. So that's what you are going to take out of your savings account to buy this property. Okay. So you are taking your hard-earned money. I want to know how hard my money is working for me. So how hard is this $31,000 working? Because if I'm comparing it to other investments, that's how I look at it. Okay. So my money is working for me. Okay. Now stick with me. We're going to scroll down back to that page. Let me zero this out. Now we're going to go back to this monthly cash flow and the performance page. Okay. So now again, you guys, we're looking at just this right now for year one. Okay. So that means my hard-earned money, that $31,000, okay, it is earning 16% every single year. You guys, I don't know where you are going to find a 16% return. You're definitely not getting it in your bank account. This is just the cash on cash return. So what we're going to do is we take all those expenses. How is that number calculated? Basically, you're going to earn about $5,000 profit a year on this property after all those expenses are taken out. That is your profit. Okay. Then you're going to divide that 5,113. We'll just call it 5,000. You're going to divide that by your money that you spent on this property, okay? That gives you that 16%, okay? That's how we know. We take the profits and we divide it by what your money is that you spent, okay? 16% year one is pretty freaking good. Well, what about year two? You guys, it's much higher here. And then all of a sudden year 4, it's much higher here. Look at almost 30% by year 10. Okay. That is because of rental increases. Okay. every single year, your property manager will have the opportunity to raise the rents. Okay. So this is just an assumption. That's why it's in this category called assumption. There are some markets where it's higher. There are some markets that it might be lower. Okay. This is a strategy, but it is an assumption. So that's pretty freaking awesome. Now, there's a couple other things that I want to show you on the spreadsheet. Gosh, there's so much I want to show you. But this little tab right here is going to show you the equity, the wealth. Let me get the tab back on. This one is going to show you equity wealth. Okay. This means that let's look at year 5. Okay. In year 5, you're going to be sitting on about $63,000 worth of equity. That means your profit on this property, not including cash flow. We're not talking about cash flow. We're talking about if you decided to sell this property in 5 years, this is potentially your profit, okay? And that is based on this 4% appreciation. Now, this market actually appreciates a little bit more, and I'm being very conservative with this number, but I like being conservative, okay? If you're in a different market, you're gonna have to adjust that number. So not only are you making cash flow, by year 5, you're making $565 a month in cash flow, plus your property's got about $63,000 worth of equity. So amazing. So that's what that is. There's also tax benefits on here. Let me get that back here. Sorry, let me erase this. Let me go back to this. Here's potential tax benefits. Depending on how your taxes go and your accountant, you need to get with your accountant to see if you can take advantage of all these write-offs. About $10,000 a year in write-offs per property for just this one property. Okay. Pretty freaking awesome. So again, now I want to go back to the column that I was talking about because there are many profit centers in real estate. So I want to make sure that I tackle this for you really, really quickly before we go on to anything else. And that is this box. Okay, guys, this is my favorite box of all. If you're not going to look at anything else on a spreadsheet, look at this box. Basically, what it's going to show you is here is your income minus taxes, insurance, property manager. Then it's going to take out your mortgage payment. That's why it's in red. Okay. It's got the cash flow. So again, this is just year 1. Your monthly cash flow is $426 a month. This one is really cool. Principal reduction. What is that? This is monthly, you guys. We've got, see how it says monthly and see how it says annually? I'm looking at the monthly right now. That means that every single month, your tenant is writing you a rent check. And when they write you that rent check, $182 of that rent check is going to pay down your mortgage. Your tenant is not only giving you money in your pocket every month, profit, but they're also paying down your mortgage for you. One of the best things about real estate investing and getting a loan. This goes into a whole other conversation about why you shouldn't pay cash for a property. Let your tenant buy you a free home, okay? They are buying you a free home here, and it shows you every single month, $182 of that rent check is going to pay down your mortgage. Amazing. Now, this next one, first year appreciation. Okay, every single month, your property is going up in value by $450 a month. Again, that is because I put the average appreciation at 4% for this market, okay? So every single month, your property is going up $450. Now, that leaves us with the gross equity here is $1,058, okay? Now we are looking at the tax savings. Now, again, this is just taking into account a part. This is just the mortgage interest that you can write off right there. Okay, so your actual return on this investment, on this property, the first year, every single month is actually $1,140, okay? $1,140 a month. That is your true income that you're making on this property. Now, the reason why I have it laid out like this is because you don't see this land in your bank account every month, right? You see the cash flow land in your bank account, but you don't see the principal reduction. You don't see the tax benefits. You don't see the appreciation land in your bank account, but it is happening. That's why we love real estate so much, is because all this is happening in the background. But while this is happening, you are also getting cash flow. Okay? By year 10, we are looking at, $764 a month in cash flow. Okay. Now, let's say you want to retire in 10 years. Well, this gives you a pretty good indication of what this property can potentially look like by looking ahead in the future like this. You're looking at it's cash flowing $764 a month, and you're sitting on $108,000 of equity. And that is so important because then we can make decisions, okay? We can decide, are we going to sell the property? Are we going to take money out? Are we going to do a cash out refinance and buy more properties? This is just a really, really, really amazing tool to give you a snapshot, okay? So we want to look at year one. Okay, we want to look at this year one column and go, great, the math looks awesome. Now let's go ahead and let's look at year 5. Okay, now year 5 looks pretty amazing. Now we can start strategizing and planning and figuring out how you're going to scale or how many properties you might need to buy. Okay. So anyways, I hope this was really informative for you. Again, if you're working with myself, I plug all this in for you. Okay. If you're buying your own properties and you want my spreadsheet, absolutely, you can have it. Just fill out that form on the webpage that you're looking at now, and we will get this calculator over to you. We're going to send it to you by a Google link. So anyways, nice meeting you, and I hope that I see you on more of my programs that I have. I always have lots of really cool stuff going on. So you will be on my email list, and I can't wait to see you down the road. Bye.